Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our video of stocks with ex-dividends next week. So every Wednesday we go through, screen for stocks that have ex-dividends next week. Now, why is the ex-dividend important? Well, if you were to buy that stock anytime prior to the ex-dividend date and held it up until the ex-dividend date, you would be eligible for the dividend payments in the upcoming weeks or month from the ex-dividend date. So some investors, they like to look for some value buys prior to the ex-dividend date. That way they can capture a great buying opportunity and get paid out those dividends. So here we go through using dividend.com. We click on ex-dividend dates, put in our specific dates that we're looking to look for stocks in between. So here I have July 30th through August 3rd. I click search and I sorted these by the DARS rating system. Well, what is the DARS rating system? On dividend.com. You can pause this really quickly and kind of read through this. Basically, anything that has a 4.6 to 5 is highly recommended. Anything with a 3.6 to 4.5 is just recommended. So it shoots out all of these stocks here. So Hasbro at 5.0, Matson at 5.0. As we move down the list, you're going to notice that the rating goes much lower, and there's several pages of this. But to keep it pretty quick, I only go down to 3.6, which is a recommended rating. So I captured all of those, put those into my spreadsheet. I actually had 59 of them that came over that had a 3.6 rating or above. But the first step that I did, of course, was knock anything with a 1.5% yield or under right off. So knocked it right off the bat. So here, why do I do that? S&P 500 dividend yield is at a 1.81. I round down to 1.5. That way I'm able to look for some stocks that are also growth dividend stocks, such as Apple, NVIDIA, Activision Blizzard, and be able to screen them and include them in my list. Next, of these 44 stocks, I then use the S&P 500 PE ratio, which is 24.43. I round it up to 25, and I go through and I begin knocking these off for a PE ratio of under 25. I keep those ones. I keep anything with a PE under 25. So then, from that point, from 58 stocks down to 44 stocks, down to, I believe, 17 or 20 stocks at that time, I then went through and looked at stocks that have, their current PE is great, 21.18, but I want their forward PE to also be dropping. I don't want their forward PE to go up because that means that their earnings are decreasing, in the upcoming quarters. They're expected to decrease in earnings, which would drive up their PE. So I want to go ahead and remove anything that has forward PE rising, remove from my list. So I did that as well. Okay, great. At that point, I still had 13 stocks on my list. So the next thing I did here was go look at revenue, net income, free cash flow over the last 10 years. And I want to see this change over, percentage-wise over the last 10 years. So I could just quickly look at this. Clorox, for example, has raised their revenue by 12% over the last 10 years. That's an increase of 1.2% on average per year. I went through here and removed anything that had a negative number as far as raising, decreasing revenue, decreasing net income, decreasing free cash flow. Just chucked it out the window. Didn't care of the stock ticker symbol or whatnot. At that point, I had still 11 stocks. So I went down to 5 years. We've came out of a rut after 2013-14. I wanted to have stocks that have, progressed since that point. So again, Clorox passed the list, People's United passed the list, PetMed Express passed the list, Smt Bank Corp, and so on. So all of these have done really well and increasing their revenue, net income, and free cash flow over the last 5 and 10 years. Okay, so now we're going to go through and look at each stock individually. And I've already kind of looked through these. I don't believe any of them had looked like a great buying opportunity right now. Looking at their price and dividend yield in their standard format. Let's go ahead, kind of move this to the right there. I know people like to use their phones and be able to see the information on their tiny little devices here. So price and dividend yield. So all of these right now, I think maybe one or two is trading with a yield over price, but Clorox trading with a price over yield. If you had bought this back in what looks like April, you would have locked in nearly a 3% yield and a price starting point of 115 bucks. So really quickly, I like to just punch in their 200-day moving average, their price, and their dividend yield. Here you can see they were trading below their 200-day moving average. They were below that yield, but they recently increased out of April and came up to or around their 200-day moving average. So right now, they're considered about average right now, but they're not trading below their yield. The reason their yield has increased here out of that rut is because they had a payout increase. So here in January, they increased that dividend payout, which took effect in the following quarter, and that's why that increase has been here. But then their price also shot up, so that kind of shot it out of whack. But anyways, Clorox looking like a great, not a great bond opportunity at this moment, but financials do meet the mark. I'm going to continue to watch that here for a second. Next, we had PE and forward PE. So they're currently at a 21.18. Forward's looking like a 20.23. Again, not a crazy growing company, so their earnings are slowly rising quarter after quarter, year after year. Price to book, price to sales. Their price to book has came down due to their price coming down. You can see here, this stock may have been overpriced for quite a while, but it has came down and recently hit a point here after April where they are trending sideways now. So investor confidence went up as soon as they hit a specific price. They saw their financials are doing well. Their price to book got to a healthy number. The price of sales never moved. It's still been consistent. That's good there. Let's see here. Return on invested capital. This is basically what's their return on your invested capital. So once you put money into them, once you've invested some of your capital into them, how much cash in return are they making from your invested capital? So Clorox is at a 26.71%, and cash conversion, how many days does it take for them to convert your invested money into cash flow? So a negative number here is great. That means that as soon as you have money invested with them, they're already churning it and making it into cash. So they have products out there that are already working for them, and good numbers there. So in return on invested capital, you want anything over a 10 for return on invested capital, and this you'd have to basically compare it to another comparable company, but a negative number is great there. They're not taking many days. They're not taking any days to get your invested capital converted over to cash. Okay, so that's Clorox. 40 years of dividend growth, payout ratio at 68.1. Some people would consider this a bit high. I like to buy anywhere below 60% payout ratio. And let's see here. Oh, we did see that they had 40 years of dividend growth since back in 1978. So this one not only increases their dividend every year, year after year, but they've also increased it and paid it out year after year. So here, 80 cents to 84 cents to 96 cents. So very healthy dividend payouts. If you bought this stock on July 29th, which is Sunday, so you'd actually have to buy this one on Friday, and then you'd have the ex-dividend date on Monday, and then you would get paid out on the 17th of August. So that is Clorox. We're going to go through the rest of these pretty quick because none of them had really looked like a buying opportunity. Here for the year, price over yield. We'll go through these pretty quick. Yield over price. That was the only one that had a yield over price. So Smt Bank Corp, price over yield. Bank of New York Mellon, yield over price. Okay, so 2. Sierra Bank, price over yield. Very spiky here. Price over yield. And Northwest, price over yield. So Bank of New York, yield over price, and PetMed Express, yield over price. And so I think these are kind of our focus ones. If you guys would want to do a deeper dive into these could be a potential, PetMed. I'm not 100% sure what they do, or the Bank of New York. That's just another financial institution there. Trading below that 200-day moving average, trading with a dividend yield over the average for the year. So those look like your two value buys or value lookups. So if you guys want to look up some stocks, those would be the ones. The remainder of these stocks, they have a pretty similar, these are all financials here, so they have a pretty similar price to book, price to sales, 5.6, 1.7, 3.5, 1.4, 4.2, 1.7. So they all stay within that 3 to 7 range, and their price to book is right around that 1.5 to 1.7. Right in that range there. Now, cash conversion, these financials, they're all going to have a little bit different. You can see they're all in that 6, 7. These normally don't have a 10. Some of them do. I believe some of the financials we went over last week did, but all of these here, People's United, they all had about a 4 to 7 return on your invested capital. They don't have any sort of cash conversion cycle, so they don't have any products out there that they're churning out. PetMed, they would have products out there that they're churning out. Clorox has products out there that they're churning out, but none of these financial institutions do. So that is basically all I wanted to show, besides going over the ex-dividend date and the payout ratio. So looking at People's United here, we can take a look here. I was trying to drag these so that they kind of snap together, but not too worried. 200-day moving average and 1 year. And let's zoom out just slight there. Okay, so People's United priced at $18.42, trading below the 200-day moving average, but not greatly a buy. You can see dividend growth for the last 11 years since 2007. Back in 2007, what did they do? Looks like they cut their dividend here. They did have a stock split. If I can click it. 3 for 2. So they basically give you a 1 share for every 3. 3 for 2. So for every 2, you had 3. They basically give you basically an extra 3 for 2. So for every 2 shares that you held, you had an extra. So they increased your dividend payout by 50%. So if you were getting paid out $100, they increased your dividend by $50. Basically half of whatever your dividend payment was. But you can see here, after that 2008 recession, they did pull it back and then lock it in at 15 cents up until 2011. So yeah, they did cut it, but they also had that stock split in there. So maybe they were anticipating, they had 2 stock splits of 3 for 2. So interesting there. So 11 years dividend growth, payout ratio not too bad, under 60, 54.3. Ex-dividend is on Monday. You'd have to buy this one on Friday. You would then get paid out on the 15th of August. Next, we have PetMed Express. PetMed Express has been paying out dividends and growing dividends for the last 6 years. Payout ratio, 47.4. I would consider that pretty healthy, under that 50% range. August 2nd is their ex-dividend date. So that is next Thursday. You'd have to buy this one on Wednesday. You would then get paid out on the 10th of August. So in 2012, if we come down here and take a look at 2012, what did they do? That's when they began paying out those dividends. So really, they haven't gone through a recession. 2012. 2012. Actually, what did they do here? Maybe they just locked it for a while. 10 cents, 13 cents, 13 cents. No, it doesn't look like they locked it. They had a special payout there of $1 per share. So this one really hasn't gone through a recession or pullback. So PetMed Express would be an interesting one. It's not actually a pet. It's a drug delivery. This would be kind of an interesting one to look into. I would be interested in looking into that. I'll probably look into that myself and just look at what they do. Kind of interested. It has a little snippet here down towards the bottom. PetMed Express, the company markets prescription and non-prescription pet medications and other health products for dog, cats, and horses direct to the consumer in the United States. PetMed was founded back in 1996 and is headquartered in Florida. So, interesting snippet there. Okay, next we have Smt Bank Corp. We have Dividend growth the last 5 years. Very low payout ratio at 35.3. Been paying out dividends since 2013. Ex-dividend is August 1st, which is Wednesday. You'd have to buy this stock on Tuesday or prior. You would then get paid out on the 16th of August. So 2013, what had happened here? Looks like they cut their dividend. 2000. Oh, they stopped paying out dividend here and had it locked. So after the crash there, they cut their dividend in half from 31 cents to 15 cents, even skipped the payment there and just had frozen it through that time. So during recession periods, Smt Bank Corp cuts their dividend, stops paying out dividends maybe once or twice per quarter randomly, and then kind of freezes out there. Not trading at a value buy right now, over trading above the 200-day moving average, and yield is very low right now, one of the lower points for the year. Bank of New York Mellon, let's see, ticker symbol BK. Yield over price under 200-day moving average of $54.61. This one has 5 years of dividend growth, very low payout ratio at 26.8, and July 30th, which is next Monday. So you have to buy this one on this Friday or prior. You'll then get paid out on the 10th of August. What happened back in 2013? Well, looking at this chart here, looks like they froze their dividend. So after the recession, they cut their dividend from a whopping 24 cents to 9 cents. So a little bit more than 50%, flattened it out, didn't increase it, started to increase it, but very slowly. Increased it, locked it out for about 2 or 3 years, increased it, and then have steadily increased it there steadily. But they have kept it a couple years in a row. We're not very much increase there. Bank of New York Mellon, not, if you're a long-term dividend investor, you probably want to pick a better one out there. Sierra Bank, 5 years dividend growth, 32% payout ratio, a little bit higher than Bank of New York Mellon, but not too bad. August 1st, which is Wednesday, next Wednesday, you would have to own this stock on Tuesday or prior of next week. You would then get paid out on August 16th. Back in 2013, a lot of these financials, they all cut their dividend. They all kept it out there. And we can kind of look at that. That's a pattern. 2015, we come down here. 2015, they started paying out dividends in 2015. So this one doesn't have a whole lot of history of paying out during recessions. This has only been paying out and increasing their dividends for the last 3 years. Very low payout ratio. Ex-dividend is Friday. You'd have to buy this one on Thursday or prior of next week. You'll then get paid out on the 17th. Sierra Bank Corp, not a value buy right now, trading above that 200-day. Yield at one of the, not the lowest, but pretty down near the lowest point you could possibly buy it at. Oh, that's Home Shares. Home Bank Corp. Okay, here's Home Bank Corp. Still, price over that 200-day. Price over the yield right now. It's been pretty consistent, kind of trending sideways. That yield's been fluctuating probably because they've been doing either some special payouts or have been raising it pretty quick. So here they had a raise, what looks like maybe November, October time frame. Had another raise here after January. So they went from paying around 14 cents to paying around 15 cents, now paying 17 cents. So 2 cents, 2 cent increases here every couple quarters for the time being. But again, they just started paying out those dividends. So this one really doesn't have history through a recession. And the last stock here is Northwest Bank Shares. Here we can see the price at $18.17. Yeah, the 200-day is $16.97, so trading above that 200-day moving average. Also, yield is at one of the lower points for the year. This one only has 2 years of dividend growth since back in 2016. Very high payout ratio for a bank at 68%. So this one would probably cut their ex-dividend. August 1st is their ex-dividend, which is Wednesday. You'd have to buy this one on Tuesday or prior. You'll then get paid out on the 16th of August. So I put these in order of growth as far as how long they've been paying out dividends and how long they've had growth. So 2016, what happened prior to there? They basically just had it locked up. 16, 15, 16. Yeah, not a whole lot of history there. Very low dividend payouts. Special one there, but mediocre. So that's why I included CLX here in the front. So these are your two top picks for this week. People, Clorox with 40 years of dividend growth, a little bit high payout ratio, but still pretty consistent. Clorox, and then People's United Financial, 11 years of dividend growth, 54.3 payout ratio. This one did 2 stock splits prior to the pullback, so really your dividend payment, they had did stock split, and then cut it. But you would have, if you had been a long-term investor there, you would have just been happy getting that consistent payment and having that extra share out of the 2 that you had got when they did a stock split there. And then I think the one that you know, if you wanted to look at one specific one to take a look at and see if it's worth it, is PetMed Express. I think this one is at a value buying opportunity, trading below the 200-day moving average, trading, let's see here, price, yeah, trading below the 200-day moving average, trading with a yield over the average for the year, has some sort of dividend growth since they've started paying out dividends, and pretty interesting there. Pharmaceuticals for pets. Horses, cats, dogs, and horses. So if you think that would be an interesting one there, let me know in the comment section below. So I tried to make this video as fast as I could, under 25 minutes, because these videos get often out of they get out of line. So hopefully, if you guys did enjoy it, if I was going too fast, let me know in the comment section below. But if you did enjoy it, let me know. Give me a thumbs up. Remember to subscribe to the channel if you have not yet subscribed. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them. If this video helped you at all in any sort of the screening process, if you guys use any sort of other financial metrics in order to screen, this is a very rough, PE under PE over 25 gets knocked off, dividend yield over 1.5 gets knocked off. I like to see rising revenue, net income, free cash flow. Those are pretty basic, but they're great for just looking for value buys. I like to look, let's see here, forward PE, like to be dropping. So very simple, very easy. That's it, you guys. Thanks for tuning in. I will see you next time. Have a great day. Bye.